we now have, I don't want to say a crisis, but certainly another leg to an intriguing story in the White House. Does it impact the markets at all?
I think
the markets.
I think all of us are political animals in one sense or another.
Well, we're forced to be now because the capital of money, the capital of money is no longer Wall Street. It is Washington.
It's not, but markets are a pretty good barometer for this type of thing. And the futures are kind of telling you right now, this probably doesn't mean a lot at this point. The question that I would have and the observation I would make is there's a book deal coming at some point, and it certainly validates the concept of deep state. What could be deeper than this? People inside the White House looking to disrupt the president, and it's certainly a national security concern.
And yet we have Dow futures, not that they are the benchmark or the hallmark or the lodestar of anything, but they are up. They're not down 400. There's no constitutional crisis being reflected in the markets.
Markets follow money, and they follow earnings. And right now, at least here in the United States, the earnings are pretty good. And I think Americans today are pretty satisfied with the economy. And it's not just the monster GDP print that we had a couple of weeks ago at 4.2%, or the fact that consumer confidence is at an 18-year high. People feel good about their jobs, and they even feel good about the prospect of getting a better job. That's a pretty good dynamic right now.
Okay, let's talk about emerging markets.
Yeah.
Let's go back to money. Because guess what? Every emerging market currency, every one is down over the last 6 months.
It's pretty frightening, and if there's a black swan lurking out there that we don't know about, this is where it lives.
Well, we know about it, right? I mean, so is it a black swan, or would it maybe be a canary that is still chirping, but is still in the coal mine?
It's pretty serious. When I see currencies, around the world plummeting, I mean, the Argentine peso down dramatically, Turkish lira, when I see credit default swap spreads, even in sovereign debt from developed nations like Italy explode higher, that tells me things aren't all well out there. And that can translate to us at some point in time. 40% of S&P revenue is overseas. These are our customers. And at some point...
And now they have to pay more.
And they got to pay more.
Because when something is priced in dollars, particularly oil and mostly gasoline, they have to pay more.
They got to pay more.
And they can't afford it.
And dollar-denominated debt is really at risk.
But why, again? The market not... this is, maybe it's a juggernaut. You know what a juggernaut is? We're talking about big words this morning. A juggernaut, something that can't be slowed down. Yeah. No, something that can't be, way too much energy. Something that can't be slowed down. There's some market that appears that way.
It is for now. It can be slowed down. Look, markets are cyclical. At some point in time, we're going to have a slowdown, and at some point in time, we're going to have a recession, but stop worrying about it. Because right now here in the United States, I'm having no trouble finding companies that I want to buy that have top-line growth, a dynamic we haven't had, by the way, for about a decade. We've been able to massage the bottom line, but now companies are growing their top line. Sales are great. I can find any number of companies out there that are good here in this country right now.
And we've got, and your advice, that sounds like, David, is for investors and our viewers and listeners out there to, as hard as it is, put down the political pages and focus on those things.
And focus here. I'm tired of people calling me up and telling me about how cheap emerging markets are. They're cheap for a reason. It's been dead money for about 12 years at this point. I think you can find better access here.